So, how will your RMDs affect your tax situation? Again, this is the whole purpose of RMDs in the first place, right? RMDs are treated as income. It's just like you're getting a paycheck from work. Okay. It's income tax. So you don't have to worry about the gain on it like you do with other types of accounts. You don't have to worry about dividends or interest or anything like that. Just whatever dollar amount comes out, that's now income as far as your taxes are concerned. There is one exception. So, one of the most common questions I get about RMDs is, Anthony, I don't need this money. I'd rather not take it out. I consider reinvesting it, but I understand I'd still have to pay the taxes to do that. Is there any way to satisfy my required minimum distribution without paying taxes? And the answer is yes. There is one way to do that. The one way to do that is any dollars you would like to donate to charity, you can donate. You won't pay taxes on, they won't pay taxes on either, the charity, and it counts toward your required minimum distribution for the year. So let me make that clear. Let's say my required minimum distribution for this year is $1,000 and I would like to donate. I normally donate maybe $100 to the Red Cross. It can be a local charity, it can be an international charity, anything that's got a 501(c)(3 is registered as a nonprofit counts toward this. So I normally send them $100 every year, let's say. Well, let me do it this year out of my IRA. And this rule only applies to IRAs. So those of you who have 457s, you can't do it out of a 457. It can only happen out of an IRA, which is the individual retirement account. That's what IRA stands for. I think I've said that a bunch, the acronym without explaining what that means. That's just the private version of your workplace plan that you can move a 457 into an IRA. And in fact, we have a lot of people who do move 457s into IRAs. Partially, one of the reasons is to take advantage of this. If you give to charity already, you can do your charitable giving out of your IRA, and it's going to be more advantageous for you tax wise, most likely. And it's going to count towards your RMD without having you have to pay tax. So I'm going to go into that a little bit deeper on a slide just in a few minutes. But just know that is the answer to the question. Is there any way I can do this without getting a tax bill? Yes. You have to give the money away. So it's not like you can keep the money, but there is one way you can do it that way.